1.
My name is Chris Guerrero. I'm a senior here at Providence College, double major in business economics and finance. And what I bring to the table is the ability to think outside the box, be a little bit creative. I can actually use data to run regressions for econometric models, and I actually plan to go to the MBA school here at Providence College as well, so I look forward to that.
Hi, my name is LaFleche. I'm a senior here at Providence College. I'm a finance major, economics minor. My goal is to be a financial analyst. And what can I bring to the table? I'm dedicated, I'm a hard worker, and I expect results, and I strive for the best.
Hello, my name is Michael Reed. I'm a finance major, accounting minor here at Providence. What I bring to the table, I believe that through previous internships and classes here, that I can excel and that it would help any team member.
Okay, thank you, Mike. So today we're going to talk to you guys about Coach Inc., the next trendy stock for your shopping bag. Coach is an S&P 500 traded company and is currently trading at $29.44. So a little background on Coach. It started as a family-owned workshop in a loft on 34th Street in Manhattan in 1941 with only 6 leather workers making wallets and billfolds by hand. Now it's operating in the luxury fashion brand industry on an international level with locations in over 45 countries, over 1,000 locations, and 17,000 employees. So there are 3 main segments to Coach's brand and their brand. So first off is North America, obviously, which includes sales to North American consumers through Coach branded stores, not to disinclude online sales and online retailers as well. This accumulates for approximately 59% of their total net sales for fiscal 2015. Also, they have international level, which also basically similar to North America. They go through Coach branded stores as well as online retailers, and this accumulates for about 39% of their total net sales in fiscal year 2015. And as of recently, they just purchased the shoe store Stuart Weitzman, which accumulated to, in conclusions, make up for 2% of their sales in the fiscal year 2015. So a bit of the industry overview that Coach is in. Coach is obviously in the consumer discretionary industry, and they have direct competitors, which include Kate Spade, Michael Kors, Louis Vuitton, Tiffany & Co. And it's a very difficult industry for Coach to be part of because it's consumer discretionary, it's also a luxury brand, so that fluctuates with many factors, but main factors include Christmas time, people buying more for their significant others or families at that time of year, as well as interest rates, and also just the global economic trends, which can lead to a decrease in purchasing of luxury brand items, such as these. So as I just said, in the consumer discretionary sector, the brand is considered to be a luxurious fashion brand worldwide. Their products are men and women handbags, men and women's wallets, men and women's accessories, as well as watches, footwear, jewelry, eyewear, and fragrance.
So just to take a look at some of the financial statistics for Coach. So just to run them off, Coach has a revenue of $4.19 billion last year. They actually have a large dividend as well with $1.35 per share. Their price per earnings is solid with 20.3, and interestingly enough, over the last 4 weeks, due to economic turmoil, the stock has actually been down 11.82%, but over the course of that time, the S&P 500 has been down 7%. So, as expected, a luxury fashion brand, obviously, is going to be hit much harder than a normal, regular, everyday household brand. So, less people are buying luxury goods. So, we ran a free cash flow analysis, and essentially, it was very volatile, just as their stock price is. What we found is there's actually large fluctuations in the percentage change from year to year, but actually it seems pretty constant when you take the 10-year average. So actually over 10 years, we had a 9% average. This shows that they have a decent amount of investment in the future, but they are also readily available with cash when it's necessary. So our valuation, we actually recommend a strong buy in this scenario, and for a few reasons. Three main points about this are, well, number one is that the stock is undervalued in our opinion, and we actually believe that it will be much higher in 2 to 3 years. We also think that Coach has steady growth, and they pay a large, consistent dividend, which shows that they have confidence in this fact. Also, they look towards the future with their large investments and their transformational strategies, which I'll get to in a second. So what makes us feel very confident about Coach, the brand, is this new transformational plan that they have to, quote, reinvigorate their growth. And essentially what the transformation plan does is in 2014, in the fourth quarter, they decided that they wanted to actually have like a new look to their brand. So they actually decided to do this multifaceted, multi-year strategy, which would close the stores that are underdeveloped and are underperforming in North America as well as internationally. And then also they have this $50 million increase in advertising. This is so that they can have a new brand image and try and have that consumer sentiment back, hopefully drive some sales growth.
Now we're going to look at the investment risk that Coach runs into. First would be competition. As mentioned before, the luxury fashion industry is a very saturated market. Second, the expansion plan. Coach plans to add over 100 stores in North America and 70 more in Japan, and they're looking to break into the market in other Asian countries. The risk that Coach runs by doing this expansion plan is they're sacrificing the quality of their product and services to accommodate for the massive expansion. Third is the seasonality. A significant portion of Coach's earnings and cash flows is generated during the holiday season, and an introduction of a weak new product line would significantly hurt the company. Also, their inability to respond to changes in consumer demand kind of relates back to the expansion plan. Because they're kind of so based in North America, that maybe this expansion, the taste in foreign markets is not the same as here in North America. Downturn in the economy, since Coach's products are mainly luxury goods, the company is vulnerable to being negatively affected by negative economic conditions in the domestic and foreign markets. In poor economic times, people tend to first cut out luxury goods. And lastly, foreign exchange risk. They're exposed to currency exchange risk related to its foreign operating subsidiaries with U.S. dollar-denominated inventory purchases and the various cross-currency intercompany loans. So other headings is, as before mentioned, the recent acquisition of Stuart Weitzman Holding. In the beginning of the year, they announced they were going to buy the luxury shoe brand for $574 million. And a little background, this last year, they had a realized net revenue of $313 million, so it's definitely a positive asset. Announcement of senior unsecured notes. The company announced in February of 2015 that there would be a pricing of senior unsecured notes for an aggregate principal amount of $600 million. And they intend to use the proceeds from this offering for general corporate purposes, such as acquisitions, capital expenditures, working capital, and other investments. And lastly is the earnings report. On October 27th, they're expected to announce earnings. And the previous 4 quarters, they beat their earnings, so we expect them to do it again. And just an investment summary. Again, recommendation, strong buy. We believe that the price is going to drive up, especially from this holiday season, and that will also drive from the recent expansion. And Coach is a household name in the luxury fashion industry, and we don't expect it to go away anytime soon.